Okay, so hello everyone, and welcome to Prosper Canada's webinar on our latest report, Missing for Those Who Need It Most, Canada's Financial Help Gap. My name is Sasha McNair, and I'm the Policy Manager at Prosper Canada and the lead on this project, in which we looked at the gaps in access to financial help services for people living with low incomes. We're really grateful for the support of cooperators, which made this report as well as our ongoing work on this project possible. So after this introduction and some housekeeping, my colleague Lisa and I will give a presentation outlining the financial context for this work, an overview of the project, our key findings, and our next steps. We'll then be joined by representatives from the private sector, government, and the community sector to have a discussion about why these findings are important, how our findings are playing out in community, and where to go moving forward. We'll then have some time for audience questions. Feel free to leave questions in the chat at any point of the webinar, and we'll do our best to answer them after the presentation and panel discussion. Just a little bit of housekeeping. All audience members have been put on mute, so please share any questions using the chat box located in the menu bar at the top of your screen. If you'd like to ask a question that isn't visible to all attendees or to follow up after the session, please email events@prospercanada.org. For closed captioning, click the three dots with the word "more" under them on the top right of the menu bar, and then select Language and Speech, and then turn on live captions. We'll be sharing the slides from this webinar as well as the report and the executive summary with all participants, and we'll post a recording of the session in the next few days. In the spirit of truth and reconciliation, I'd like to begin by acknowledging the first people, the original people of this land who have been here since time immemorial. I'd like to express my deepest gratitude to First Nations, Inuit, and Métis communities and their ancestors who fulfilled their responsibilities to these lands, waters, plant life, and animal life so that we could all be here today. I'd also like to acknowledge that I'm on traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee Iroquoian Confederacy, and the Wendat peoples, which is also now home to many diverse First Nations, Inuit, and Métis peoples. I don't wish to falsely suggest that I have profound knowledge of the dynamic migration and relationships among all Indigenous nations and communities of this territory, as well as the treaties, covenants, and wampum belts of this land, but I view continuing to learn about these living agreements as part of my responsibilities towards advancing reconciliation. For those of you who aren't familiar with Prosper Canada's work, we're a national charity dedicated to expanding economic opportunity for people living in poverty. Canada's leading national champion of financial empowerment, we work with government, business, and community partners to develop and promote financial policies, programs, and resources that transform the lives and foster the prosperity of all Canadians. I will shortly be joined by my colleague Lisa Ray, who is the Director of System Change at Prosper Canada. And Lisa and I are very happy to be joined by three very passionate and knowledgeable speakers today from the private sector, the federal government, and the community sector. We are joined by Shauna Peddle, who is Associate Vice President, Citizenship at Cooperators. Shauna has responsibility for community investment programs and partnerships at Cooperators, including corporate giving and volunteerism, the Cooperative Development Program, the Advisor Community Fund, and the Cooperators Community Funds. She is focused on social impact through partnership and collaboration with expertise in program design and implementation related to community resiliency, risk, communication, environmental risk assessment, climate change adaptation, and disaster risk reduction. Shauna holds a master's degree in forestry from the University of Toronto and a graduate diploma in social responsibility and sustainability from St. Michael's College at the University of Toronto. Dr. Supriya Sayal is Deputy Commissioner of Research, Policy and Education at the Financial Consumer Agency of Canada. Supriya is a leading expert in research and evidence-based policy innovation in Canada. She is the Deputy Commissioner of Research Policy and Education at as I said, at the Financial Consumer Agency of Canada, where she recently led the renewal of the National Financial Literacy Strategy and is now guiding its implementation to help Canadians achieve positive financial outcomes. Last but not least, Murray Baker is the Manager of Financial Empowerment at Family Services of Greater Vancouver. His particular focus is on program design and implementation, training, and advocacy for system change that facilitates greater financial knowledge, resilience, and inclusive accessibility to financial systems. He is also the author of the bestseller, The Debt-Free Graduate, How to Survive College or University Without Going Broke, which was published by HarperCollins, and which was #3 on the Toronto Star bestseller list, and now in its 14th edition with over 200,000 copies sold. He's a graduate of Western University, and he's passionate about financial education and empowering individuals to take greater control of their finances and become savvy consumers and advocates for vulnerable populations. So I'm going to now pass it over to my colleague Lisa Ray, um, who will take you through some trends that we've been seeing in the financial health of people with low incomes.
Thank you, Sasha. So I'll take you through some trends that we've been seeing more broadly and introduce the project, and then I'll hand it back over to Sasha, who will talk you through some findings. So we know that even before the pandemic that Canadians were struggling financially. We've been seeing trends in the decline of financial health for Canadians across the income spectrum, and in particular for people with low incomes for a number of years. This was true before the pandemic. It was true throughout the pandemic, where households on low incomes were hit the hardest, and it continues to be true today. And one of the things that I really want to highlight, and that is really important to recognize, is that these challenges are not new, and that we're in a bit of a pressure cooker situation right now with high interest rates and high cost of living. But systemically, these challenges have been building for over 30 years. So we've been seeing a very steady decline in household financial health in Canada. Debt levels have been rising and savings have been declining. 43% of Canadians were living paycheck to paycheck before the pandemic. 49% of Canadians lacked enough savings to stay above the poverty line for 3 months. 31% of Canadians with low income who have debt, which is about with low income, 31% of the income that people with low income have who have debt, which is about 49% of low income people overall, goes to debt repayment. And our national savings rate has fallen significantly. It's down to 1.49% in 2018 compared to 10% in 1998. Overall, as a society, Canada's debt to income ratio in 2019 was 176%, which was the highest in the G7, not a #1 spot to be proud of, and over 135,000 personal insolvencies were filed in 2019, which is the second highest number on record and the highest number in over a decade. And then we also know that recovery from the pandemic has been uneven, and that lower income households are more financially vulnerable now than they were before the pandemic. 63% of Canadians are very concerned about their ability to meet basic needs. Over half of Canadians with income under $50,000 say they are in poor or terrible financial shape. 44% of Canadians are worried that their money won't last. And over a third, 35% of Canadians are short on money at the end of the month, compared to 19% in 2019. In terms of the economy as a whole, we continue to have the highest rate of household debt to income ratio in the G7. That number has further increased to 187%. And insolvencies, while they went on pause during the pandemic, our rates are sitting quite high, with over close to 12,000 people filing for insolvency in March 2023, which was the highest number for 1 month since 2019. So in terms of some of the context of this work, and one of the contextual drivers. This project is aligned with two of the target outcomes of Canada's National Financial Literacy Strategy, which was launched by FCAC in 2021. Those priorities are priority 1, to build and provide for diverse needs, which speaks to the importance of ensuring that more Canadians have access to and are using financial products and services that are tailored to their needs, vulnerabilities, and resource constraints. More Canadians, particularly those with diverse needs or form of vulnerability, are involved in the development and delivery of financial products and services, which in turn leads to higher levels of inclusion. And fewer Canadians experience a low quality of service, including disrespect or not being offered a product or service appropriate to their needs when they're accessing financial products or services. Ecosystem priority 4, which is most closely aligned with this project, is to enhance access to trustworthy and affordable financial help, particularly for vulnerable Canadians. And that really highlights the importance of more Canadians having access to and using relevant and unbiased financial advice. And more Canadians who access that advice are experiencing positive financial outcomes. Before going into the report, I wanted to highlight for you the story of one individual who has had access to financial support and one-on-one coaching. Sometimes it's helpful through a story or a narrative to put some of these statistics in context, and also to understand what the power of the right appropriate interventions are that are tailored to the financial needs of an individual. So Ava is a single parent with 4 children. She is a real person. She is not a composite or a made-up story to illustrate this. This is an actual story and narrative about somebody who accessed community financial help services. She accessed services through the Toronto Employment and Social Services Organization. And working with her coach, Colin, she was able to take stock of her financial situation and set realistic goals to pay off her student loan and bank loans, and also to develop and stick to a budget. She was also able to create an emergency fund and was able to get a job. After the program, through evaluation and further follow-up that we did, Ava started making regular minimum payments on her OSAP loan and was able to increase her monthly payments on her bank loan because of successfully sticking to a realistic budget. 1 year after the program, Ava had successfully reached her financial goals and realized other major life accomplishments as well, including obtaining a full-time job and moving into a new house. With her new income, she continued to pay off her loans, stick to a monthly budget, and rebuild her credit score. She was able to send her first child to college without incurring any loans. And her coach, Colin, helped her open an RESP account and advise her to apply for grants and bursaries rather than taking an OSAP loan to pay for education. So in terms of the project overview, I'm going to walk you through the project overview and methodology, and then hand it back over to Sasha, who will go over our key findings. So our goal in the first phase of the project, the results of which we're presenting today, was to identify the gaps in affordable, appropriate, and trustworthy financial help for people living in low incomes in Canada. And in phase 2, which I'll speak to later on, which we're just getting started on now, we're aiming to work with financial help sector stakeholders from the private sector, community, and government to start to develop a solutions framework on how we can close the gap. So in terms of the financial help services that we studied, building on research, consultation with community stakeholders, and who have a deep expertise in the financial needs of people with low incomes, as well as our own experiencing designing and piloting financial help interventions for people with low incomes, we identified 8 core help services necessary to build the financial health of people with low incomes. The first being to conduct a financial health assessment, which aims to provide an in-depth understanding of someone's financial situation, behaviors, attitudes, needs, and goals to determine how to improve their financial health. It's often the first step that is taken by a financial planner or coach, because people with low incomes often have complex financial health needs. A health assessment can help identify and prioritize what those needs are. Number two is help to build a comprehensive financial plan, which would set out short and long-term financial goals and the steps needed to achieve them. Number three, help to develop and adhere to a budget or spending plan, which can help people better manage their money and, if possible, save or pay down debts. It's especially important for people with low incomes who generally have very little surplus income. How to solve urgent financial problems. People with low incomes experience urgent financial problems more often than those with higher incomes. People often need help compiling documentation, advocating to financial institutions or government agencies, or navigating complex benefits processes, complaints processes, appeals processes. Help to understand and navigate select access to appropriate financial help products. There is a vast array of financial products, which can make it extremely challenging for people to choose the ones that are appropriate to their circumstances and needs. And products that might be well designed for people with middle incomes or higher incomes may not be appropriate financial products for people with low incomes. Sasha will speak to this further in the findings, but RRSPs are a key example. They're not an appropriate savings vehicle for people with low incomes. And so it's really important that people with low incomes are given some assistance to be able to navigate this complex environment and choose the products that make sense for them. Help to set and pursue savings goals. While this isn't always possible for people with low incomes, given the limited surplus incomes, it's important for those who can to have the assistance that they need in setting goals and determining the savings vehicles that are right for them. Help to manage debt. There are a variety of types of debt assistance available, and people often don't know where to go for help. And there's also some predatory actors in the marketplace that can take advantage of that complexity and charge unnecessary fees. And help to file taxes and access income benefits. Tax filing being a really critical gateway into hundreds of provincial and federal benefits and tax credits. But people with low incomes face numerous barriers to tax filing and accessing benefits, and there are challenges in reaching hard-to-reach populations and ensuring they're accessing the benefits that they're entitled to. We know that, based on research from Jen Robson, that there's about a 20% gap for people in low incomes in access in tax filing. We also identified the actors in the financial ecosystem who are providing these financial help services: retail banks, credit unions, insurance providers, financial planners, credit counselors, licensed insolvency trustees, commercial tax preparers, governments, and community organizations. And once we identified these core services as well as the providers, our research approach was to map the available services by provider. We also conducted a literature scan, which really revealed a dearth of research on the issue and the financial help services for people with low incomes in Canada. And we did a market review to determine what information we could find on existing services offered by financial help providers. But a lot of the information in the report and in our findings came from key informant interviews with stakeholders from government, private sector, community organizations. And many of these key informants were eager to work on these issues and joined our advisory committee. And using the literature and market scan and interviews, we did our best to assess the affordability, appropriateness, and trustworthiness of existing services, and then validate those findings with our advisory committee. This is our project advisory committee and key informants. We'll be sharing the slides after the presentation, so I'm not going to lead through all these names, but I'll let people kind of take a peek while I'm chatting. What I wanted to highlight for people and what has been really critical for us as we do this work is ensuring that we are having that representation from private sector, from government, and from community, and we're building the understanding from a broad range of actors who see the challenges and opportunities from a variety of different vantage points, and who also we also are going to go back to private sector colleagues, government, and community as we enter into phase 2, which is working on solutions. So I'll pass it back over to Sasha now to highlight some of the findings in the report.
Thanks, Lisa. Just for those of you who have joined more recently, note that you can put any questions you have in the chat. And after a panel discussion, we will do our best to get to all of them. My colleague Anita will be going through the chat and highlighting some questions that you have. And you can just let us know whether the question is for Prosper Canada or for any of our speakers or for anyone who wants to respond. So in our report, we sliced the findings in a few different ways. In this webinar, we're going to go over our general findings to give you a sense of the issues with the entire ecosystem and the changes necessary to make it more inclusive of people with low incomes. But that said, we also have findings organized by individual service and by service provider, which you can find in the report. So the first finding is that people with low incomes have distinct circumstances and challenges that impact their ability to access and afford financial help services. For example, they're more likely underbanked, which means that they have an account with a bank or credit union, but often use alternatives like payday lenders. They often can't afford to pay for financial help services. This is particularly true of people on social assistance who have incomes well below the poverty line. People living in rural and remote areas often face distance barriers when it comes to physically accessing financial help services, as well as digital barriers. And some people don't have the ID that they need to access financial services, particularly refugees, people exiting correctional facilities, Indigenous peoples, and people who are homeless or precariously housed. And this is just some of the barriers that people experience. People with low incomes are also less likely to trust financial professionals, and people who are both low income and Indigenous or racialized don't always feel respected by them. So low income Canadians are generally less trusting than those with higher incomes, and this low level of trust extends to financial professionals and institutions. So for example, a 2021 survey found that 69% of low income Canadians rated their financial institution as poor to fair in helping them improve their financial wellness. And that's particularly problematic because low trust in a service can directly impact access. So racialized, Indigenous, and marginalized groups worry more about discrimination in the broader population, and past experiences of discrimination have often led them to speak to financial professionals less often. So you may have heard, for example, about an Indigenous grandfather and his 12-year-old granddaughter being handcuffed when trying to open a bank account in Vancouver. As Lisa alluded to, mainstream financial information, guidance, and advice is often not appropriate for people with low incomes because it fails to consider their distinct circumstances. That's particularly problematic for low-income people because generic financial guidance can potentially be harmful to them. So, for example, people who are on social assistance face strict savings and asset limits. So financial advice that fails to take these limits into account can result in clawbacks or in people being kicked off benefits. And as Lisa said, RRSPs provide tax deferral benefits to middle and higher income Canadians, but generally don't for Canadians with lower incomes. And in retirement, withdrawals from RRSPs result in benefit clawbacks for retirees with low incomes. We found that most commercial financial help providers don't tailor their services for people with low incomes. So the financial help providers that we interviewed really understood that people with low incomes have different financial needs from people with higher incomes. But despite that, many commercial providers don't ask customers for their individual or household income when providing services and then tailor their services accordingly. And in some cases, financial institutions may run analyses of client incomes or of other aspects of financial vulnerability, but they don't generally have a comprehensive understanding of the income breakdown of their clientele. Because most commercial financial help services aren't designed for people with low incomes, there are few appropriate financial help services for this population. We didn't really find that much when we were looking when we were doing our market scan. Things have improved a little bit on this front. So the Fine Consumer Code now requires banks to ensure that any products and services that they do offer are appropriate to their clients, but it doesn't require them to offer a suite of financial help services that meets all of the needs of all of their clients. I'll speak to this a little bit more shortly, but there are some community organizations that offer free comprehensive financial help products created for people with low incomes, but as we'll discuss, they're not available to most Canadians. Financial institutions often offer free basic financial help services, but more comprehensive financial help is typically not accessible and or affordable to people with low incomes who need it. So, for example, a financial institution might discuss which savings account is most appropriate for a client's needs, but likely wouldn't help someone create a more comprehensive savings plan that takes into consideration their goals, their cash flow, and how much they can reasonably contribute. And more comprehensive financial help services offered by financial institutions are often only available to wealth management clients who generally need a minimum of $100,000 in investable assets. There is a small but growing number of financial planners who offer their services on a fee-for-service or advice-only basis, but a financial plan can cost from $3,000 to $10,000, and ongoing services range from $120 to $400 per hour, which is well beyond the range of anybody with a low income. We also found that most financial institutions and professionals lack the understanding, tools, and training to provide relevant and appropriate financial help services to people with low incomes. So banks, credit unions, and commercial tax preparation companies don't train their frontline staff to understand the financial barriers and issues faced by people with low incomes. And there are few tailored tools and resources to support them to meet the financial help needs of low-income people. Because of this, many financial professionals who are highly competent in meeting the needs of middle and higher income clients lack the adequate understanding of the financial context and needs of people with low incomes to serve them appropriately. Most financial professionals don't have a deep understanding of the ins and outs of, for example, social assistance and benefits that many low-income people rely on, or of the complex interactions between these programs. And so without this knowledge, they risk undermining the financial health of people with low incomes. One of the main findings was that there isn't a strong commercial business case for seeking and serving clients with low incomes due to limited profit generation opportunities. So people with low incomes often cost more to serve, and they don't generate as much revenue as higher income customers. So commercial financial service providers lack the financial incentive to serve them. We thought that there might be some technological solutions to this because technology can reduce service costs, like the cost of staffing a branch. But because revenue generation opportunities are limited with this population, fintechs also lack a business case for serving or targeting people with low incomes. Are significant pressures on fintech startups, especially those with venture investors, to achieve strong revenue early on or to show that there's a large market opportunity. As I mentioned, select community financial empowerment organizations offer free, appropriate, and comprehensive financial help services, but they don't have the research or geographical reach to meet the needs of all Canadians with low incomes who need help. Most of the services offered by these community financial empowerment organizations are free. These organizations really understand the financial context and the needs of people living on low incomes and tailor their services accordingly. And community members trust these organizations because they see them as unbiased. But while community delivered financial help services are generally free, appropriate, and trustworthy, they are not available in all communities, largely due to lack of funding. And they tend to be underfunded, so they lack the capacity to meet community needs. We've heard from community partners that the financial problems of community members are increasingly complex, which is putting an additional strain on these organizations. And the last finding, before I hand it back to Lisa to talk about our next steps on this project, is that Canada would benefit from the collection and publication of more comprehensive, disaggregated national data on access to financial help services and financial inclusion more broadly. So for this project, we have real difficulty finding quantitative data that we could use to map and analyze the gap in access to financial help services. So we had to rely primarily on qualitative evidence. So more comprehensive public disaggregated data on who is financially excluded in Canada and not able to access the financial products and help services that they need would provide the empirical foundation that we need to inform the development and targeting of solutions and to measure their impact. So I will now pass it back to Lisa for our next steps. Again, a reminder, if you want to ask a question, just put it in the chat, which we are monitoring.
Thank you, Sasha. So now that we have mapped the landscape and the gaps in services, that we're moving forward with starting to develop solutions and think about how we can close these gaps and also connect with people on low incomes, and also connect people with low incomes to appropriate, trustworthy financial help services with the goal overall of trying to improve people's financial health. A key feature of this work, and in order to be successful and to develop actionable solutions, we've been engaging broadly across government, across the private sector, with community, and also with people with lived experience to really understand what the realm of the possible is in terms of actionable, palatable solutions. So we're actively building a list of stakeholders. We're actively connecting with people on this presentation to share the findings and to understand, to further validate them and understand how they're thinking about these gaps. And we also plan to continue to work with a cross-sector of stakeholders to develop a solutions framework to think about how we can start closing that gap. So right now we're in the process of conducting a jurisdictional scan. We're looking at the US, we're looking at Australia, the UK, and New Zealand. We're also open to looking at other jurisdictions, but those have been ones that have been highlighted for us because they have made large-scale federal investments in financial help services for people with low incomes. We're also going to be conducting a literature review and key informant interviews to further understand from the perspective of individual vantage points in the private sector and various different departments and offices in government or different departments, how they're thinking about these issues and how they're thinking about, are they sharing these concerns and how we might think about closing the gap. One of the models that's emerged for us early on in looking at the US, the UK, Australia, and New Zealand is this idea of a federal investment in community financial help services. And we're going to be looking at this closer to better understand how it works, how priorities are set, how investments are made, what services are funded. But one of the models that we've seen in a few of those jurisdictions is that there is a levy placed on the mainstream banking industry, on banks, and that funding that's raised is reinvested back in community and sort of recognizing that community is best placed to deliver those services directly to people on low incomes. We're also planning to conduct focus groups with people with lived experience, people on low incomes, because we want to understand from their perspective, what solutions would work for them on the ground, and if there are solutions that resonate in particular for them. We're going to be pulling together an insights document that sort of has a bit of a summary around some of the solutions, the pros and cons, the challenges associated with those solutions, and further presenting that to a cross-sector of stakeholders through convenings and bringing people together, bringing together our advisory group and expanding that advisory group to validate those insights, and to include more voices and perspectives in terms of understanding what potential solutions might look like. And then also launching a solutions framework, which would put together, after we've had a chance to sort of kick the tires on a number of different options and solutions, have a presentation of different options in terms of closing the gap. So that's phase 2. I'm going to hand it back over to Sasha, who will facilitate the panel discussion with our invited guests.
Thanks, Lisa. So at this point, I will ask our panelists to put their show their screens. Amazing. Well, welcome all. Thank you so much for joining us to give us a sense of how you're connected to this work, why you think it's important, and some insights from the perspective of your sectors. I'm going to start by asking you all, and I'll start with Shauna, I gave an introduction, I gave your bios earlier on, but could you tell me a little bit about your organization and your work, and how it's connected to this work?
Thanks, Sasha. Good afternoon, everybody, and thanks for joining us. My name is Shauna Peddle, and I'm the Associate Vice President of Citizenship at Cooperators. I'm based in Guelph, Ontario. So for us, citizenship means how we show up in communities. And as a national financial services cooperative, so we do insurance, but we also do wealth management. What does that mean for us as a cooperative to be part of our communities? My role is to oversee all of our community giving and programs. We focus on building community resilience through social wellness and an inclusive economy, through environmental resilience and a more cooperative society. All of our work supports the cooperator's main purpose, which is financial security for Canadians in our communities. And we're formed about 78 years ago now to meet unmet needs in our communities. That drives what we do today. We tell the story of the reason why we exist as a company is that back in 1945, there were farmers who couldn't get insurance from anyone else, couldn't get the products that they wanted, the services that they wanted. So they came together and formed their own. They created their own. And that's how we started as a company. So that's why this is so incredibly important to us. We see through our work in communities today that financial resilience is still a major challenge across the country. Anyone who's just sat through the presentation that was just given to us knows that this is a continuing issue and it's only getting worse. That access to reliable and safe and affordable financial help is a major gap. So to make progress on our own corporate purpose of financial security, we engaged Prosper back in 2021 to help us to better understand the landscape and how we could help to catalyze change, knowing that it's not just us, that it has to be a whole of society approach. So we're working now with them to broaden that understanding of those key gaps, the key challenges that we're going to face, and then bringing together multiple organizations, a cross-sector approach around closing those financial gaps. So ultimately, when I think about the work that we do and why we're here, we're a cooperative, and that model is inherently sustainable. So we support, of course, the United Nations Sustainable Development Goals. The ultimate goal there is to leave no one behind. Whether you're talking about environment, you're talking about society, you're talking about governance, it's really about making sure that everybody is being heard and being accepted and being helped in a way that's important to them, not in a way that we assume is. So we have a bit of a longer term view, and we want to make sure that we're not just being responsive to the profits that our company can make, but also making the communities around us better. And so that's why we're here today. Thanks.
Thanks so much, Shauna. Murray, I'll pass the question on to you. Tell us a little bit about your organization, your work, and how it connects to this work.
Great, thank you. I'm Manager Financial Empowerment for Family Services of Greater Vancouver. And Family Services of Greater Vancouver is a large organization that really works on building strong families. So it includes emotionally, mental health, overall well-being. And a component of that, of course, is financial well-being, which tends to permeate all aspects of a person's life. So that's our focus. And really the focus of our financial empowerment is to build strong, resilient individuals. And we do this really in a number of ways. One is through financial literacy and education, through workshops, um, educating people on the basics, maybe information that we assume everybody knows. People do not necessarily have access to that. I'm always struck, for example, when we speak to groups of youth, maybe in their mid-20s, and at the end of the workshop say, this is excellent information. Why didn't they teach us this in high school? And that's been a question I've been asking for many years as well. So it's really giving people the tools to make sound financial decisions. The other component is our one-to-one coaching, and we use a trauma-informed, non-judgmental approach. One of the advantages we have is that we're not tied to any product sales, so we can give open, unbiased advice in terms of how investments work. And our intent is not to give people specifics as to what products or that to purchase or engage with, but rather to explain how they work, caveats, risks involved, fees that they should be aware of, things like that, and helping them to feel strengthened and empowered so that they make good, informed financial decisions. I mean, everybody, no matter how much information, you're going to make mistakes from time to time. But if people have that greater sense of confidence and they have that information, they're going to make less errors, if you will, in terms of financial decisions. So that's a big component. The other strength of our program is that it really provides a safe place for people to talk about their financial difficulties. And because we use a holistic approach, we also look at what else might be going on in their life. So it could be family strife, it could be disability. There could be many factors involved, and we look at that as using a holistic approach. So yes, we help people financially in terms of budgeting, financial goal setting, strategies for paying down debt if they have it. But we also, where necessary, are referring to other areas within the agency or other professionals that can help with the other issues that are maybe going on in their life. So that's really, in essence, the third component, of course, of our service is we're given the advantage of dealing with people on the front line, so we get feedback from them, and we see some of the systems that are in place that are holding people back from moving ahead and becoming more financial resilient. So a component of our work is, such as involvement with the advisory committee, is looking how can we develop system changes which enable people to move forward and build that financial stability and resilience in the long run. Thank you.
Mute, Sasha.
Sorry. Thanks, Marie. Now I'll pass it to you, Supriya, to tell us a little bit more about your work about FCAC and how you're connected to this work.
Thank you for inviting me to be. I'll begin.
We're having a little trouble hearing you, Supriya. Maybe I don't know if you want to come in a little bit closer to the mic.
Better? Helping you at all? No?
Oh, that's a little better. Yeah.
A little bit better? I can try changing the settings if that's helpful. If you like, I can do this.
I think,
Is better?
yeah, I can hear you a lot better now. Yeah.
Okay, all right. Sorry about that. Should have tested that before. We're using a new setup here. But I'll begin by acknowledging I'm joining you from the National Capital Region, which is the traditional unceded territory of the Algonquin Anishinaabe people. As Sasha introduced me, my name is Supriya Sial. I work at the Financial Consumer Agency of Canada. We are an agency of the government, and our mandate is to protect financial consumers. I am one of two deputy commissioners at the FCAC, and I run the research, policy, and education functions of the organization. And I will say that there are many alignments with the work that me and my colleagues and I do at the organization, and much of what is being talked about here. So we issued the National Financial Literacy Strategy for Canada in July of 2021, as Sasha alluded to. And the strategy is really a call to action for financial ecosystem stakeholders to create a more inclusive, a more accessible, and a more effective financial ecosystem for Canadians, where all Canadians can build financial resilience in an increasingly digital world. And resilience is the word you've heard said a few times in this conversation already. And I think it's interesting, but it's also obviously very telling that organizations across the country are converging. I think perhaps coming out of the pandemic as well, and the financial situation right now in the country, where we're all starting to really understand and underscore the importance of helping individual consumers and groups of consumers and communities build financial resilience so that they can weather the storms that they are either currently in or may find themselves in the future.
Thanks so much, Supriya. You're all doing such important work, and we're very grateful to have you as advisors on this project. Murray, I'd like to start with you. Reflecting on the presentation and some of the findings of this project, could you talk a little bit about how these findings resonate as somebody who is working in community, and how you've seen these gaps affect people with low incomes in your community?
Yeah, thank you. Yeah, and we are seeing huge gaps among our clients that we work with, and we're working with a population that very much does feel excluded from the financial system. They feel that whether it be because of their low income, their race, their social status, they feel that the financial system is just not interested in them. And so oftentimes we see them come to us to make use of our services, oftentimes in deep or fairly severe financial difficulties, because they feel like there's just been nowhere to go. And we see this actually in multiple aspects. Certainly, people dealing with debt that has accumulated. Part of this, of course, being that there's the lack of access to affordable credit. Traditional banking, they feel many times excluded from, may have difficulty opening a bank account. And also, the third area, of course, is financial advice to build their financial stability. They feel that, with their low amounts of saving, there's just not that financial incentive for a financial institution to give them the time necessary to explain how products work and deliver the appropriate products that they need. So oftentimes we see clients, for example, that have gotten dragged down in debt, particularly the last year in this environment of high interest, high inflation. And particularly in BC, we're seeing that now, where recent stats that came out yesterday showed that 20% of the population is paying over 50% of their income in rent. So, we see people that are having trouble with debt. Sometimes the criticism from society is that, these people are making poor financial decisions. We don't see that. We don't see people going out and making frivolous or impulse buys. We see people accessing credit to make ends meet, to make sure there's enough food to feed their family, to make sure their rent's paid each month. So it's difficult for them, and oftentimes it's not a case of them making choosing the poorest option. Sometimes in many cases, it's a case of them choosing the only option that's available at that time. So they may access, for instance, a predatory lender. I often find that the best analogy I have is that I've come up with is that it's like a ship capsizing. Everybody's thrown overboard. Those with job stability, good credit ratings, good income, they're going to be throwing financial lifeboats. Those with unstable employment, poor credit history, low income, we're throwing them half-inflated pair of water wings. Both of those are going to keep you afloat for a certain time, but in turbulent financial waters, people hanging on to the water wings are going to be dragged under. And that's what we see at our agency. People coming in that are being dragged under because they don't have that financial lifeboat to hang on to. And I think as a society, we need to ensure that everybody has access to a solid, stable financial lifeboat rather than a pair of half-inflated water wings, if you will. So I think that's important for us to keep in mind, because we also see clients that come to us that are wanting to save for the future, for example. They want a better life for their children, for example. So they look into RESPs, or they're wanting to get financial advice that's relevant to their situation. And as identified in the study, that's something that's really lacking. When we do workshops, and that will oftentimes get asked about things such as Bitcoin or marijuana stocks. These are not obviously solid financial products, but it's the information. Where are they getting it from? Word of mouth, talk in the media. That's not solid, trustworthy financial advice, but they don't have access to accountants, to advisors, to brokers that can give them that good, solid advice. So that's really lacking. And another example is that we see people making mistakes that they probably wouldn't make if they had access to that financial advice. And a good example we see is individuals that are maybe strapped one year for cash. They need to dip into their savings. And of course, we're seeing more of that this past year. So people might have an RSP that they have money in. They withdraw it, not realizing that it could push them into a higher tax bracket, so they're going to pay a higher tax rate. And it also could preclude them, and we've seen this, preclude them from receiving some of the benefits they were previously receiving, because all of a sudden now they're in that higher tax bracket. So those are the errors that they wouldn't make if they had access to that financial advice that's necessary. To ask the question, well, maybe it's not the best idea to pull out an RSP, or maybe they shouldn't have had money in an RSP in the first place. Maybe it should have been a TFSA, which is maybe more appropriate given their income level. So that's what we're seeing with those individuals. We're also seeing, for example, people trying to save for their children's education, and they're accessing some of the commission salespeople of the group RESP plans, much higher fees, more restrictive. And we know the data backs this up, that disproportionately those types of products are accessed by low income or newcomers in society, rather than them accessing the less restricted, lower fee, self-directed plans that financial institutions offer. So again, those give you a little bit of an example of what we're seeing. And finally,
Thanks, Mary.
Okay, I just want to say one thing in terms of the financial gaps. We're seeing that it triggers not only the financial, but the emotional as well. So it's affecting relationships, addictions, health, and those are the long-term implications we see. Thank you.
Thanks, Murray. Those are really helpful examples that kind of, I think, help to, give it like elucidate a little bit some of these findings and some of these numbers, and give us a real world kind of understanding of what that means to people. So thank you so much. Shauna, I want to ask you, given the finding that people with low incomes are not providing commercial financial service providers with a lot of profit, why is this something that the private sector should care about?
I think the report highlights that there's really a significant portion of our neighbors and our friends and our communities that's being underserved by the financial sector in Canada. And I will not try to speak on behalf of every financial service provider in the country. But I think that there's a great opportunity for us. There is a subset right now of private sector that's specifically targeting this very vulnerable group for profit. We talked about predatory lenders. We talked about service providers that are maybe doing things that are not above board to be able to take advantage of people that aren't necessarily well equipped to be able to handle that. So we can't sit by and continue to watch that happening. I think that we can't let people continue to drift further and further from shore. I had the same type of analogy as Murray. So he's got the water wings and I've got the boat drifting away from shore. But I think we're on the same page of just saying that we just can't continue to watch this anymore. And I think we're starting to see more and more purpose-driven organizations like ours that are thinking about the broader picture of it not, the financial services sector's historically been focused on profit. But there is an opportunity here for us to be able to support all Canadians and not just those high wealth clients. That we're coming out of a pandemic. We're a very precarious time for everybody right now, but absolutely certainly for low income Canadians and for people who don't have the social capital and the supports to be able to carry them through. We're entering into a possible recession. We're seeing food insecurity, housing insecurity, income precarity in ways that we've never seen this before. And it's all magnified and highlighted because the cracks in the systems are being amplified by the pandemic. So we really, as a sector, as a private sector, we need to be thinking about more how we can support these people, how we can make them into more sophisticated clients. Because you're bringing in somebody right now who is maybe low income, they don't know what services they need, they don't know what products they might need. If we can take them now and bring them to a place of sophistication and being savvy, they're going to bring more and more business to us as they grow themselves and as they get more settled and as they're better able to. It's still not going to be necessarily a high income driver for us, but then they tell their friends and their friends tell their friends, and it becomes a market driver for us. And then our clients hear about this, our staff hear about this, and they become more and more connected to our purpose, and they're better at their jobs because of it. So yes, there is absolutely always going to be that market for those high value, high worth people, but there has to be, the business has to be connected to the purpose. And we have to bring along everybody. As I said in my introduction, we can't leave anybody behind. And the more we leave people behind, the more it takes away from the business that we do. So I think it's really critically important for us to keep following our purpose. It is in our social license to operate, and it is for the entire sector. And we have to be able to create the business case. It's not about waiting for the business case to show up. We have to be able to make that happen. We have to be able to take this from corporate social responsibility and philanthropy into the business. And so we start with us. We start with this piece about serving people for community good, and we create a business case so that the business comes along with us. And I think that that's the onus is upon us as a financial sector to be able to do that more effectively and to think about people and not just as numbers.
Thanks, Shauna. Really, when you talk, you can tell how much you care about this. Supriya, we mentioned that the kind of impetus for this project came out of a priority in the national financial literacy strategy. Can you talk a little bit about why this is a priority for the federal government and for the FCAC?
Thank you. People, both Shauna and Murray have spoken to financial hardships, negative outcomes having increased for a number of Canadians, particularly through the pandemic. And this is even more true for already vulnerable financial consumers. And in our own data as well, we're seeing that more people are borrowing to cover expenses, more people are borrowing from high-cost lenders, and overall well-being and resilience is decreased. So, in thinking about the national strategy, we asked ourselves the question of, well, how can we really actually help people? Like, what can we do? And a core sort of piece of that was that we need to understand how people are making these decisions that they're making. How are people, approaching their own financial well-being, and how are they then navigating this marketplace that they find themselves in? Sort of a key piece, which comes from behavioral science or psychology, is that people don't make decisions in a vacuum. What is around them really impacts people. And it is not the case that people don't have good intentions. I mean, you talk to the average person on the street and you say, most people on the street would say, well, yeah, saving money is a good thing. Taking on too much debt is a bad thing. Budgeting is probably going to be helpful. So it's not like people don't know these things. It's that people are faced with barriers that prevent them from taking these actions. And even when there aren't barriers, people sometimes don't have the right impetus. They don't have the right catalysts to actually, take the actions that will lead them to financial well-being. So in conceptualizing the strategy, that is sort of how we framed it, where we said, well, there are barriers in the environment, and which we need to remove, and there are catalysts in the environment which we need to add. The environment is the financial ecosystem, so that's all of us who sort of who create this ecosystem that consumers operate within. And we need to, Shauna just used the word onus, we need to take the onus off of individual consumers, and we as a collective need to take some of the responsibility for helping people build these, these good financial outcomes. And really the strategy is a call to action. It's a call to action to all stakeholders across the country to say, look, we need to work together. And that is how we will help Canadians build financial resilience. In many ways, it's a logic model. It lays out the steps. And when you were describing at the outset, the links to the strategy, so there's a barrier reduction priority, which is build and provide for diverse needs, that this project is linked to, and then there's a catalyst. But let me speak to the first one, where we're essentially in the strategy, we're saying, well, if we don't build and provide for diverse needs, if we're just putting out one size fits all solutions, products or services or educational methods or what may be into the environment, if they simply don't work for people, then they're not going to work. And there is no one size fits all solution. We have to meet people where they are in their specific circumstance and help them given that context that they are in. And I think this is also very much linked to the other piece in our strategy, which is sort of, so there's multiple priorities, but you alluded to this one. And then one of the key catalysts that we think is increase access to trustworthy and affordable financial help. And I think there are two parts to this priority. So the first is, no matter how well we educate people, we cannot expect them to be experts at everything. Nor can we reasonably expect them to correctly identify the right information among the millions of messages we are bombarded with every day, right? People are making financial decisions among a host of other decisions every single day. According to some cognitive science research, tens of thousands of decisions that you are making in an average day as a human being. So sometimes people, you, we just need someone like a trusted expert, someone who will help us, given our specific circumstance, he'll tell us what to do. And what is important for then achieving those good financial outcomes is that this expert be a trustworthy expert. And that's when I said there's two parts to this priority. That's the second one, which is that it is not the case, and this has been alluded to in this conversation earlier as well, it is not the case that such relevant or unbiased or trustworthy advice is unavailable today. It is available. It is available to those who can afford it. And to those who need it the most, specifically vulnerable, low-income Canadians, it is either unaffordable, or even when it is actually, there is low cost of free advice, people simply do not know how to access it. They don't know where to go, and they don't know what will be most helpful. And I think that is one of the key reasons this project that Prosper has been, leading has been of such interest to us as an organization, and we've been really proud to be a part of it, is that we need that map. We need an understanding of where should people go for this kind of help and this kind of advice. And once you understand those gaps, which is what the phase one has done, that's when you can start to plug those gaps and say, okay, well, these are the places that people can now go to actually find the right kinds of help that they need. And then the last thing I'll say here is that we're living in an environment where increasing digitalization of financial services, right? And there's all of this innovation. And while on the one hand, there's complexity in the financial system, there's issues that it brings. It also brings a lot of potential for good, such as the ability to provide just-in-time information to people, such as the ability to provide tailored financial education and messaging, So we think this is really sort of a pivotal point, if you will, in the evolution of the financial sector, where with the right kinds of interventions now, such as this financial health project, which will lay out, well, what are the gaps and how do you plug it? And then once in the plugging, one can start to test, right? I can say, well, let's test this. Did this work? It worked. Awesome. Let's scale it. Let's test this other thing. Totally didn't work. Please, let's stop it. That kind of thing, it gives us the ability to do. And in sort of testing and measuring various solutions is how we think we're going to be able to make change that counts for Canadians so that they can build financial resilience.
Thanks so much, Supriya. You alluded to kind of a complex environment, and one thing that really struck me when we were doing our key informant interviews, and the more people we've talked to, is just how complex each service is, how complex the information is, the different places that you can go to get support. So if you have a really, really complex financial situation, looking at this ecosystem is just the complexity is really astounding. So Murray, I have a question related to that for you, but just before I ask it, if anybody else has questions for our speakers, please feel free to put them in the chat. We are monitoring that. But Murray, given the complexity of the kind of financial advice ecosystem, can you talk a little bit about, the typical, or maybe there isn't a typical, but a kind of the experience of somebody with a low income who has a complex financial situation, who's trying to get help with this?
Yeah, so really the type, and you're correct. We have very diverse clients that come in to see us to receive financial coaching or make use of our services. One thing seems to be in common is that they seem overwhelmed. I think would be an accurate way to describe them. A sense of fear, oftentimes a sense of shame in terms of their financial situation. And because they're overwhelmed, oftentimes feel like it's a hopeless situation. And when we work with clients, we can obviously solve their problems in an hour coaching session. But what we do find is them coming in and talking to one of our coaches, and the coach working with them, looking at different options, maybe some strategies. That doesn't solve the issue right away, but at least gives them some hope and puts things in perspective. So oftentimes they're so overwhelmed, it's a massive cloud hanging over their head, but looking and breaking it down into different steps they can take is a big relief to them. As I mentioned, it's oftentimes a complex situation where it's not just financial. So it's not a case of just setting up a budget for them or working with them for financial goal setting. There's oftentimes other things going on in their life. They may be fleeing an abusive relationship. They may be somebody who has lost their job. They may have a disability. They may have left work to care for a sick child, for example. So many different aspects. And that's where we really partner with a lot of different organizations to deal with the other issues that are going on as well. So we may be referring them to the rent bank rather than them accessing a predatory lender. We may work with them to a tax preparer to make sure their taxes are filed so that maybe they're not receiving some of the benefits. The other tool that we're using is a great tool that developed through Prosper, is the Benefit Wayfinder, to work with them and support them going through this tool to see what benefits they may be eligible, because it could be that there's a couple of benefits they're not receiving, and that could add or boost their income to make life more palatable or take some of that stress off. So it's really complex. That's where it's really been an asset for us to have many different partners that can provide some of those services so we can work with them. But it's important to, in those other areas of their life where they're having complexity, whether it's the need for counseling, that we can refer them to them as well. So that really gives you an idea of the type of clients that we're seeing and the situation they're in when we do end up seeing them.
Thanks so much, Murray. Shauna, from the perspective of a private, I know you don't want to speak for all the whole private sector, but from the perspective of a private sector financial help provider, can you talk a little bit more about kind of some of when we're thinking about moving into solutions, like what are some of the challenges and limitations that exist in filling some of these gaps, and what role can the private sector play in trying to find solutions to fill them?
Um, I think I started earlier with the challenge about there not being a clear business case. And I think that that is one that all of us will bump up against at some point because I mean, we have to make money. Even if we do good, we have to have money to be able to do good. So that will always be there. So thinking about how to be savvy about getting around that, or thinking about it as something that we can do in addition to that, that it's not, the two things don't have to be separate. I think that would be the first one. Another challenge is really around connecting how we serve to the target groups who need to be served in a way that is tailored to their unique circumstances. And we've come across this. This has come up a couple times today. And we know what we do well. I mean, at Cooperators, we've got 6,000 staff across the country. We've got advisors in 500 communities. We have call-in centers. But we also need to recognize what we can do better, that we need products and services that are tailored to specific needs, specifically things around a tenant's insurance product that is for newcomers, that is small. So you're paying a small amount per month because you only have a few things to protect. So just making sure that we're tailoring our paperwork, our expectations. We have a new product that's called New to Canada, and it's an auto product that does not necessarily need to know all of your driving history from the country that you came from, that gives you credit because you've been a good driver, regardless of whether or not you can prove it on paper because you're a refugee and you had to run out in the middle of the night and you didn't bring your insurance documents with you. Or even worse, you don't want your home country to know where you are. So how do we find those little ways to get in to meet the needs of individual people when it's not always in the best, the biggest business case for us? We also need to think about compensation models for our salespeople that are tailored to adapt to those lower cost opportunities and offerings. We need to think about staff who have lived experience, particularly for us around Indigenous people. How can we make sure that we have specific offerings and things that are tailored to them and the things that they need to ensure, but also that when they call in, they have somebody who can understand those needs, and outside of the Indigenous community, somebody who might speak their language and speak their home language and be able to start that conversation. People who are diverse, who can understand and evaluate the different needs, who can go out and also engage with their communities, because it is really difficult to walk into a big insurance building or walk into an advisor office with no understanding of what exactly it is that you might need and what you're going to experience when you get there. So how can we go and be in front of people in a different way? So show up at different community events, have people who look like the people we're trying to serve. How can we make sure that we're doing that as well? I've seen it come up in the chat a few times, and this is something too that I have a really big interest in as well, is how we can harness all of those staff people. If I have 6,000 people across the country who are in communities across the country, can I train them to become financial literacy trainers? Can I put them out into different communities because they want to? This is what they do for a living. So why can't we share that with the communities that we're serving? There's also challenges about how we get the word out in the first place. That if we do have these great products and these great services, how do we work at that community level? And then how do we work with community service organizations? And that's something that we do as part of our corporate giving and our community impact side. But how do we make those connections between the connections we have, for example, through Prosper? How do we make those connections happen for the business and make those two things talk to each other? Finally, there's one big challenge around how we get all the various players on board. Is that I think in this conversation today, we're speaking to our friends. We're speaking to people who understand the way that we want to approach it and the needs and the best way to move forward. How do we get in front of the people who don't know yet? And the organizations and the financial services organizations who don't think and feel the same way that we do. So how do we make those connections? How do we bring people together to collaborate and innovate and problem solve around an issue in a pre-competitive space? So we can work with other insurers, we can work with other financial service providers in a way that doesn't jeopardize any of us and makes us be able to better serve the people who need us most. And so I think that the private sector can show leadership They can overcome, these are challenges that have always been there. They're not going to go away, but they can be adapted, and we can have a way that allows us to be able to better support the people who right now need us more than ever.
Thanks so much, Shauna. Supriya, I'm going to ask you one last question, and then we've got some questions from the chat. So I will get to those right after this. But I wanted to ask you, what are the key questions that these findings raise for you, and how these findings and those questions kind of tie into some of your priorities at the FCAC?
Thank you, Sasha. So, you know, really the key question I think is how do you plug the gaps, right? Like how do you identify them? And then I think both of my co-panelists have spoken to that a little bit as well. But really, it's about, how do we as an ecosystem build a business case for it? How do we work together to actually do it? How do we innovate around what we're doing? How do we measure what is working, what is not working, and then how do we scale? Like all of those are questions that one might pose. And I mean, I stand between this and audience questions, so I'm going to be brief, but I will say, there's a few different things my co-panelists have alluded to, but I'll just I want to put a slightly different flavor on them. So this thing about reaching people where they are is absolutely true, but about going into community, and it's so important to have representation, right? Like people who look like the people we're trying to reach is so crucial. I think we also need to contemplate that same thing in other ways too. So, for instance, we have been running this experiment. We're trying to increase the financial confidence of young girls. Now, it's not specifically about, affordable or trustworthy financial help, but these are all linked behaviors, right? We know people who are more confident make better decisions. We also know women are endemically underconfident. But the meet where you are piece here is that we've created a online scavenger hunt for children who are in the grades 6 through 12, where they go and do the scavenger hunt thing that leads them to places where they, find information and then are able to answer a series of questions, at the end of which, we are able to assess confidence, and they also get school credit and so on for this. The meet where you are piece here is that let me wake up and spend 3 hours on a Sunday morning thinking about financial literacy, said no 13-year-old ever. Like we have to find them. We have to give them something that works for them to really to reach them in a way, that is going to hopefully lead to some results. In this experiment, for instance, we are seeing results. Another example of this I can give you is we've finished an intervention, which is, refund to savings, where we try to get people to save their tax refund. And what happens in this experiment is, like, at the very end, when you're filing your tax refund, which is a nudge, the behavioral intervention, try to get people to put it into a savings account as opposed to a checking account. And this pilot experiment showed a $1.3 million increase in self-reported savings. So if you extrapolate that, for every 1 million Canadians who are exposed to this intervention, we could see as much as $23 million in savings, in additional savings. And again, the point was, when are they making the decision? Where are they when they're making the decision? Many people are filing their taxes online. At that point of decision, you sort of meet them and you're like, okay, well, here's an option for you. So I just wanted to put a bit of reframing around, the meet where they are. And then, of course, there's other pieces like co-design, include the people who you're trying to serve in doing it. One key piece to this is this is just true of human beings. The easier you make something, the more likely people are to do it. So, defaults work really, really well because people don't have to do anything to do it. It's the easiest possible thing. It's the status quo. So to what extent can we help people in that way? And then the last thing I'll say is we need to be realistic about what we think financial literacy can and cannot achieve, right? It is one thing among many things. As I was saying, people are bombarded with many kinds of messages, and yes, of course, it has a role to play, but also we just need to design the system around them, the ecosystem, that piece about reducing barriers and adding catalysts, so that it is an enabling system as opposed to a system that actually gets in their way, even when they have good intentions. I know I said the last thing, but I will say one other thing. We have to measure. We have to measure whether or not what we're doing is working, because in the absence of that, really, it's who's to say, right? We can't really know what we need to scale and what we need to not scale, which is, I think, equally important. But I'll stop there.
Thank you so much, Supriya. Evident, this is something that you think a lot about, especially from the perspective of how human behavior works. So I will move on to our first question from Lisa, who says, I'm not hearing anything related to the distinct and unique needs and needed training to address the financial needs of some people living with a disability. Did anything come up related to people with disabilities? And who can or is providing needed financial help services? So I will just take a quick stab at answering that from the perspective of our work at Prosper Canada and from the perspective of this report, and then I'll pass it to our panelists to add anything if they have something to add. So this is a really important question. I think especially as we approach the solutions development, we're really going to need to think about intersectionality and how does low income intersect with having a disability or being Indigenous or racialized, or how does it intersect with sex, etc. Specifically on the issue of disability. Prosper Canada has done a lot of work looking at the barriers that people with disabilities have specifically in accessing government benefits. And this is a particularly germane time to be having this conversation because C-22, the Canada Disability Benefit Bill, just passed yesterday. We're expecting it to get royal assent in the next few days. And Prosper Canada just published a report with March of Canada on the accessibility of the Canada Disability Benefit and how we make sure that we're reducing some of those barriers. And I won't go through all of the barriers now. You can certainly find that on our website. But just to say that disability benefits are some of the most difficult to get. You don't just file your taxes. You have to, there's a whole lot of other stuff, including going to see a health professional and having to pay for that. And so how do we ensure that when the Canada Disability Benefit comes out, we're anticipating some of those barriers and we're making sure that the benefit is as barrier-free as possible. So I will now, if any of you want to comment on that or comment on some of the barriers that people with disabilities have in accessing financial help, go ahead.
Yeah, I can address, certainly we work a lot with individuals with disabilities, and there is a unique set of barriers that they face. For example, somebody in BC who's receiving PWD is not automatically considered as receiving eligible for the disability tax credit. So it's a separate application. So again, it creates more hoops for them to go through. You identified the fact that they have to go through a health practitioner to have them fill out the application for the disability tax credit. Some of those physicians can really charge whatever amount they would like, and for somebody who is low income, paying $200 or $300 for a benefit they may or not receive is a prohibitive amount. So again, another barrier. We're also finding that a lot of times people will apply for the disability tax credit and go to open a RDSP, a lot of people don't know about the registered disability savings plan or some of the parameters around that. Going into a financial institution, I know we had one client that went into one financial institution to set one up. It had to be set up through their brokerage unit. It required them to write checks. This person with a cognitive disability, that was just not an option for them. It was overwhelming. So we had to go to another financial institution that was much more accommodating. So it really shows these barriers that many of us would not take as a barrier, but for them, it is. And it's something that needs to be addressed going forward.
Thanks, Murray. We have 2 minutes left. I'm sorry, I've been a bad host. Supriya, Shauna, do you have anything to add quickly on that? No, okay. I'm sorry that we haven't been able to get to more questions, but I want to thank all of you for joining us, and I want to thank all of our speakers for taking the time to join us today. Oh, it's going to make me scroll through all of my slides, isn't it? All right. Well, just a note that we are going to send out an email after this with the recording of the webinar, with the report and executive summary, links to the webinar recording, a link to a webinar survey that we would love for you to take. Thanks again so much to all of you. Thanks to our speakers, Shauna Peddle, Dr. Supriya Sial, and Murray Baker for taking the time to share their insights on this work. And thanks also to cooperators for making the report and this webinar possible and for continuing to support this project as we move forward on finding solutions. If you'd like to follow up after this webinar, you can email events@prospercanada.org, or Lisa or myself. Our emails are here. We encourage you to sign up for Prosper Canada's newsletter, to check out our online training, and to follow us on social media for updates on this project and on our broader work. Thanks again, everyone, for joining us, and we're wishing you all a lovely day.
Thank you. Thanks, everyone.
Thank you very much.
Thanks, everyone.